Hello, and welcome to Billionize. In today's video, we'll be discussing how the US House Republicans are currently proposing a bill that aims to abolish the IRS and eliminate the income tax system in the United States. This bill would fundamentally change the way taxes are collected in the country and would have a major impact on the US economy, both in terms of government revenue and the way businesses and individuals plan their finances. Under the current income tax system, US taxpayers are required to file annual tax returns and pay taxes on their income. However, the proposed bill would replace this system with a flat tax or national sales tax system. The flat tax would be a set percentage of income, regardless of the amount earned, while a national sales tax would be a percentage of goods and services purchased. The bill would also abolish the IRS, which is the government agency responsible for enforcing tax laws and collecting taxes. This would mean that a new system would need to be put in place to ensure taxes are collected and individuals and businesses are compliant with tax laws. While the passing of this bill could result in lower taxes for businesses and individuals, it could also mean that the government would have less revenue and would need to find new ways to fund its operations. It could also mean that government services and spending would have to be cut in order to make up for the loss of revenue. Proponents of the bill argue that a flat tax or national sales tax system would be more fair and efficient. They also argue that a flat tax would be simpler for individuals and businesses to understand and comply with, which could help to reduce compliance costs. However, critics argue that a flat tax or national sales tax system would be regressive and disproportionately affect lower-income individuals and households. They also argue that it would be difficult to administer and enforce a national sales tax system and could lead to increased tax evasion. It is worth noting that this bill is still in the early stages and it is uncertain whether it will pass and become a law. If passed, it would have a major impact on the US economy and the way taxes are collected in the country. It is important to consider both the potential benefits and drawbacks of this bill as it moves through the legislative process, and to keep an eye on the progress of the bill. While this bill may have the potential to shake up the US economy, it is important to consider the potential consequences that come with such a drastic change to the tax system. One major consequence is the potential loss of jobs within the IRS. The IRS employs over 80,000 individuals, and the abolishment of the agency would mean a significant loss of jobs. Additionally, a new system would need to be put in place to enforce and collect taxes, which could be costly and time-consuming to implement. Another consequence to consider is the potential loss of government revenue. Income tax makes up a significant portion of the government's revenue, and the loss of this revenue could lead to a decrease in government spending and an increase in other taxes. This could have a negative impact on important government programs and services that rely on funding from income tax revenue. It's also worth considering the impact on the economy, as the government relies on income tax to fund its operations and stimulate economic growth. A flat tax or national sales tax could potentially have a negative impact on economic growth, as it would decrease government revenue and lead to cuts in government spending, which could lead to a decrease in consumer spending and job opportunities. Another aspect of this bill is the potential for increased tax evasion. As a national sales tax system is not easy to administer and enforce, it could lead to an increase in illegal activities that avoid paying taxes. It's important to weigh all these potential consequences before making any drastic changes to the tax system. While this bill may have some potential benefits, it is important to carefully consider the potential consequences as well before making a decision. It's also worth noting that there are other ways to simplify the tax code and make it fairer for all without completely eliminating the income tax system and the IRS. It is also crucial to look at the long-term effects of such a bill. While it may seem advantageous to some in the short term, it could have negative consequences in the long term, leading to a decrease in government revenue and a decrease in economic growth. It is important to take a comprehensive approach to this issue and consider all options before making a decision. In conclusion, while the bill proposed by US House Republicans to abolish the IRS and eliminate the income tax system may have some potential benefits, it is important to consider the potential consequences as well. This bill would have a major impact on the US economy, government revenue, and the way taxes are collected in the country. It is important to keep an eye on the progress of this bill as it moves through the legislative process and to weigh all options before making a decision.